I want to talk about today, why potentially not to buy Tattoo Chef stock, ticker symbol TTCF. So pretty much my only concern with Tattoo Chef is payback time. I think the payback time on this company is extremely long compared to the about 8 or so year payback time you can get it on potentially better companies out there than even Tattoo Chef. Payback time is basically how much a company pays you back in the bottom line over time. Some people use operating income, some people net income, or even free cash flow. So to understand it more, I read the book Payback Time by Phil Town, and I totally recommend it. So it's like, to give a more in-depth example, it's like if a company generates, say, $100 million in free cash flow per year for 10 years, and you buy the company currently at a $500 million valuation, the payback time is about 5 years, and payback time below 6 to 8 years is really good. Payback time below 10 years is great as well. I'm still invested though for many reasons, but one, because I believe they can demand a pretty good multiple in sales and net income. So for example, they can grow say a little bit of earnings, but it can still add a good bit of market cap per earnings, just because the multiple they can demand on that, in my opinion. But that's also more risky than more of an absolute valuation, such as a payback time. So anyways, that's pretty much it. And then if you further look into it really, so I'm going to explain this a little bit further. Just give me a second. I'm going to explain it deeper. So if you take an example, so it's going to take them years and years just to get $100 million, okay, to the bottom line. So it's going to take them years to do that. That eats into payback time period, and it makes it very long. So absolute valuations on Tattoo Chef pretty much suck, like payback time. Relative valuations are what more people are looking at, kind of more of those type of valuations, like multiples on whatever they're going to bring in. For the most part, people are using top line, which I think is okay because of the growth. They're in the growth stage right now and stuff like that. But you have to take into account the fact that these type of companies are not extremely profitable. Okay, so it's going to take them years and years to get $100 million to the bottom line. It's going to take them years to even get $1 billion in revenues, and the market cap is like $1.5 or so billion as of now. So that just kind of shows you the payback time for this company pretty much stinks. But then you take a look at the acquisitions they've made. The acquisitions they've made have been really good. I think the payback time, they're really good. So the fact that they have they have hundreds of millions of dollars to work with to do potentially more acquisitions, they can shrink down the payback time with those acquisitions by buying something undervalued, like Tattoo Chef stock, in my opinion. But remember, I'm not a financial advisor. Full disclaimer in the description. Anyway, so that's pretty much my only concern. But they kind of can eat away at these returns if they continue to make these great acquisitions that are accretive to the actual fundamental value. So the two twin engines to outsized returns. One is that strong underlying fundamental growth, and the second one is multiple expansion. So actually, the third one could kind of be with this company, short interest, so short squeeze potentially. But anyways, so you're going to see strong underlying fundamental growth, in my opinion. And so, yeah, this is a risk and a potential reason not to buy Tattoo Chef. But there is many reasons why this can actually, go down. This risk can go down over time, especially since they have lots of cash to work with to potentially make really accretive acquisitions. So this payback time can shrink. But like I said, it's going to take them years and years just to get $100 million to the bottom line. So when you think about $1.5 billion company, payback time is trash. Absolute valuations more risky when you have a relative valuation. You're looking at multiples to put on these different metrics, these fundamental metrics. So, it's kind of scary there, okay? So that's a potential reason not to invest into it. But I'm invested, of course, and I'm bullish long-term on this company. So that's pretty much it. Thanks for watching. And why am I talking about Tattoo Chef today? There's so much more exciting things, but I just said I was going to make a video on it soon, so I'm just making a video. Thanks for watching, and